Hey guys, how's it going? Solo back at it with another weekly options trade idea video. And just remember, Monday is Labor Day, so the stock market is closed. So it is actually a short 4-day trading week this week, which can be a good thing or a bad thing because the premiums are probably going to be just a little bit less juicy because there's only 4 days that the market is open. However, on the plus side, you only have 4 days for your option to get max profit, hopefully. So just keep that in the back of your mind. But taking a look at the Earnings Whispers weekly chart for which tickers have earnings today, just 4 stocks really caught my eye. And on Tuesday after close, I was looking at Slack here. If you're not familiar with Slack, Slack is basically like the professional version of Discord. They're kind of this online chat room, for lack of a better word, where you can upload, audio files, pictures, video files, whatever you want very easily, and also obviously chat with whoever's in your group, have multiple channels open, things like that. So when I think about Slack, I look to see what other similar tickers probably did maybe the week before or the following week. And, tickers like DocuSign, I would think fall into kind of the same category like Slack that's kind of doing well right now where people are working from home or working remotely. So if you're looking at the tickers or the stock graph for DocuSign, who had just had earnings this past week, the DocuSign graph actually sold off after earnings, even though they had good earnings. So I'm wondering, even if Slack does have good earnings, which I probably think they will, if it will sell off just like DocuSign did. So I'm a little bit hesitant to play Slack, but we'll keep an eye on it in the coming video. The other tickers I was looking at were Kroger, and this is probably the one I'm looking at the hardest because this is Friday before market open. Taking a look at Chewy. You've seen some of my videos in the past, maybe about a month or two ago. I was taking a look at a Chewy stock because the premiums tend to be a little bit juicy on Chewy. They're going to be even juicier now that it's earnings week. Peloton I'm looking at, but I am going to avoid Peloton because if you follow Reddit, Peloton, for whatever reason, has been this big kind of meme stock on certain subreddits, which will not be named. But even now, Peloton's premiums have always been juicy, and they're going to be even juicier now that it's earnings week. But I would say Peloton is a very high risk, very high reward play because I think that ticker could go up or down no matter what its earnings shows. But that's one that stood out to me. And really nothing else stood out to me looking at this weekly graph here. So let's just get right into it. So the first ticker I wanted to look at was Kroger. If you're not familiar with Kroger, or if they don't have a Kroger in your area, they're basically, think of it as a grocery store. And, obviously this 1-day graph doesn't look that great. But if we zoom out and look at the 1-year graph, this is what you want to see in a ticker, in my opinion. It is basically up and to the right. And I would say, if I didn't show you the dates on this graph, you probably didn't know when peak illness happened. Yes, it's right here in the middle. But as you can see, even though during peak illness, it still kind of had this upward trend. And it never really broke past that upward trend, even during peak illness, which is interesting. And just looking back at some of my earlier videos, there have been days in the stock market where everything in the market was red, but Kroger was flat or even a little bit green. So Kroger, for whatever reason, just from me kind of just keeping an eye on it, seems not to be affected by what the overall market is doing, or doesn't seem to be affected as much. And that's kind of reflected in this graph here where it's just continued to keep going up and up and up. If we look at this 5-year graph, it's had its downward dip, kind of a little bit rally, kind of downward again. But as you can see, as of August or July of last year till now, it's been going straight up to the sky. So that's something I'm definitely keeping an eye on. And the other thing is it's nice and cheap or relatively inexpensive compared to some of the other tickers we looked at last week. It's only $35 per share. So let's take a look at some of these Kroger options to see exactly how juicy they are. So if I want to sell a cash good put on Kroger for this coming Friday, the 11th, I would collect at the money $92 in premium, over $3,500 in collateral because it's $35 per share and every contract is 100 shares. So it's 35 times 100, which gives you $3,500. And so the return on risk for Kroger is actually 2.6%. It's not the greatest we've seen. It's not the highest we've seen, especially for tickers that have earnings. But, if you're looking for a relatively inexpensive ticker and collecting juicy premiums at the same time, it's not that bad of a deal. My only concern is what its volume is and if you can get filled at a good price. Because just look at the option chain right now. You know, if I want to take a look at, let's say, the $33 ticker here, or $33 strike price, I should say, that's $25 in premium divided by 3,300 in collateral, and that's about a 0.8% return on your risk, which is not bad. Has an 84% chance of profit, which I think is fair given its return on risk. But as you can see, the volume in open interest is in the low hundreds, so you could probably get a fill. The nice thing though is that the bid-ask spread is not very wide, so I think if you do get a fill, which you should be able to, you would get filled at a decently fair price. So I think Kroger is something to keep an eye on, because my prediction is that they will beat earnings and they will probably continue to go up just based on what their stock has done over the past year. So that's on my short list of tickers to look at. I mean, if we take a look at the TradingView chart on Kroger, again, you can kind of see just been straight up and to the right. And the other thing about Kroger is if you do end up getting assigned shares, they do pay dividends. So that's another way you can earn income if you do end up bag holding shares for whatever reason. So next ticker I wanted to talk about was Chewy. If you've been watching my videos from the past, you can see I've already done a little bit of DD on Chewy because I've been watching the stock about probably 2 months ago now. So if we extend these Fibonacci levels all the way up here, you can see right now, at least on the past sell-off for the past 2 days or trading days, we've broken down below the 0.236 Fibonacci level. So we did rally a little bit on Friday. It'll be interesting to see where Chewy wants to trade this week. But in the past, I mean, I was looking at Chewy back when it was trading in the 30s. And as you can see, it's almost doubled in price. It's trading in the 60s now. So Chewy has also had a nice run up because of the illness. Because if you're not familiar with Chewy, they're basically the Amazon of pet supplies or pet food. So as you can see, if we look at the 1 year graph, again, very similar, just straight up and to the right. So let's take a look at Chewy's options here, because I also suspect, or my prediction is, that Chewy is going to have a good earnings session. Now Chewy is about double the price of Kroger, so depending on your portfolio size, you may be able to play one and not the other, but let's just take a look anyway. So Chewy, I mean, look at this. The at the money cash secured put is $578, which is pretty high considering it's a $62 stock. So that's going to be divided by 6,200 in collateral or at risk. And wow, I don't think I've ever seen a return on risk this high. 9.3%. Chewy is extremely juicy. Wow, that's crazy. I may have to take a hard look at Chewy, because you could probably sell a cash you could put very far out of the money, probably 90% chance of profit, and still collect a very good return on risk. Let's just take a look at those tickers. So 90% return on risk is about $47.50. So let's just see, $44 in collateral for $4,800, or let's just say $47.50 at risk. And your return on risk is still going to be 0.9% with a 90% chance of profit. Wow, that is, in my opinion, a very good trade, especially because I'm pretty bullish on Chewy in the short and midterm. So I'm going to take a close, hard look at Chewy, because I don't think I've ever seen a return on risk at the money of over 9% on an established company. I mean, yes, if you're going to look at these penny stocks or these kind of lower price pharmaceutical stocks or biotech stocks, they're going to have juicy premiums just because they're very high risk tickers. But I would say Chewy is relatively stable. I mean, they've been doing well during the illness. They have been doing good business. I'm sure a lot of people have heard of them. You can go to their website if you've never heard of them. They have a decent and well-performing business. They're not some speculative company, in my opinion. So for a return on risk of 9.3% in a week, or actually not even a week, in 4 days, that's actually looking really juicy to me. I mean, if we just take a look again at the TradingView chart, it's had this big run up. Yes, it's kind of had this, its ups and downs, its undulating pattern, but it's always been trending upwards. So I think even if you do get assigned shares of Chewy, you probably won't have to hold them that long, because it looks like Chewy just keeps going up to the moon. So right now, between Chewy and Kroger, I do like both of those tickers, but just because of the return on risk that's so high on Chewy, I'm liking Chewy a little bit more than Kroger, even though it's double the price for each share. Now, I did mention Peloton, so let's just take a look at it, but I can tell you already that I'm going to stay far away from Peloton because honestly, its return on risk may be just as high as Chewy, but I really don't understand the meme appeal right now of Peloton. I mean, again, look at it. It's just going up and to the right. If you're not familiar with Peloton, they sell essentially an exercise bike that you buy. They ship it to your house. And the thing about their exercise bike is they have kind of a big iPad-looking screen in the top, and you can pay, I think it's $20 or $30 per month for subscription, and you kind of get these live instructor classes that keeps you motivated while you exercise. But the bikes, I believe, are very expensive. I think they're at least $1,000 or $2,000. So they're not for the faint of heart. But for whatever reason, on certain subreddits, Peloton has been this like epic meme stock. And I think because its premiums are so juicy, and now that it's earnings week, I can tell you there's going to be a lot more speculative plays on Peloton. But let's just see how juicy these premiums are. So the at the money cash you could put, if you were to sell it, you would collect $1,028 in premium for $8,350 at risk. And I think this is going to be even juicier than Chewy. Wow, 12.3%. I think a part of these juicy premiums this week is because the volatility index, or the VIX, has been higher than usual the past 2 days. So I think that's also accounting for just the bump up in premiums across all tickers in the market right now. But wow, 12.3%. I mean, I'm curious now. What if I tried to sell a put that was very, very far out of the money? Let's say a 95% chance of profit. Just curious to see what kind of return on risk I would get. But it looks like the further out I go, you can see the premiums are getting a little funky. They're going up to a penny, then 21, then 20, then a penny again. So that usually means that these options have relatively low volume and a wide bid-ask spread. So you can see here the bid-ask spread here is from 0 to $1.61. So it's a $1.61 gap. And that's why the mark price is a penny. But if I go down to 58.50, it's still not much better. It's 1 penny to 41 pennies. But you can see the volume is less than 100. The open interest is less than 200. So that's why the premiums are a little bit funky. But let's just say 90% chance of profit. I mean, once I start seeing premiums that don't make sense, meaning like this going from 139 to 57 to 111 to 65, you know this is usually a function of a wide bid-ask spread, which is usually a function of low volume and low open interest. So let's see. I mean, again, it's looking funky here at 131, then 72, then 77, then 113. So it might be a little bit harder to sell a very far cash you could put, very far out of the money cash you could put on Peloton. But let's just see where it starts to make a little bit more sense. I would probably say around $68, which is 78% chance of profit, which is a little bit too close to the money that I would like. But let's just do it just for the video. $206 in premium divided by $6,800 in collateral. That's going to be a 3% return on your risk, which is very good for a 78% chance of profit. But I usually like to sell puts at least at 80, usually at like 85% chance of profit. And especially on what I consider to be a very speculative ticker like Peloton, you know, it's just not juicy enough for me. I would have loved to sell a put like 95% chance of profit for a 0.4% return on my risk. I mean, I think that would be a fair price. Let's just see. If I were to go to 58 strike, so $20 in premium for $5,800 in collateral per contract. So this is going to be just about a little under 0.4%. The bid-ask spread is not that bad. I mean, it's 30% wide. The volume in the open interest is not that bad. I mean, it is over 200. For 0.3%, I mean, if you absolutely wanted to play Peloton, I mean, if you were a madman and you wanted to really gamble this week, you could gamble relatively safely, I guess, and I put relatively in quotes, for a 95% chance of profit if you can get filled at around $20 in premium come Tuesday when the market opens. But yeah, I personally am going to stick away from Peloton just because I know that certain subreddits are going to meme it into oblivion this week. So I'm going to stay far away personally. The last ticker I wanted to look at was Slack, and its ticker is actually WORK, or WROK. One thing I noticed about Slack is that it's kind of been up and down. I mean, if we take a look at Robinhood, it hasn't been just up and to the right like the other three tickers we mentioned. So if I go to the 1 year graph here, See, it's kind of flat. Yes, it rallied a little bit. Now it's kind of on a downward trend. If you look at the 5-year graph, it hasn't been around for that long, but you can see it IPO'd basically around $38, immediately sold off all the way to a low of just under $20 during peak illness. Did rally back about to where it IPO'd, and then now it's still again in a downward trend. So I'm not too happy with that. I don't really like the way the stock graph looks. I mean, if you look at the 3-month graph here, you would think, again, now that more people are working from home or working remotely, products like Slack should have really taken off, like products like DocuSign did, but it really hasn't. It's kind of been just very up and down. And my concern would be, if you end up bag holding Slack, who knows when or if it'll rally. So let's just take a look at the options chain just to see exactly how juicy the premiums are. But if I were to sell a weekly cash secured put on Slack, I would collect $242 in premium divided by $2,900 in collateral. So the one nice thing it does have going for it is it's a relatively cheaper stock compared to the other ones we've looked at so far. But that's only, and I put only in quotes, at an 8% or 8.3% return on your risk. So it's not even as juicy as some of the other tickers we just looked at. So I think I'm going to stay away from work as well. Let's just take a look at the TradingView chart here. I mean, just to do some very quick kind of technical analysis here, you know, one thing that scares me is if you were to draw some trend lines here about where work has gone since, let's say, early June. I mean, it's kind of been trading in this downward channel here. And so, you know, that's not what you want. You don't want it to be downward trending. I mean, it's basically something like this, I would say. And so that tells me that this ticker is going to kind of maybe bounce between these two trend lines, and these trend lines are downward facing. So that's not something that I would want to end up bag holding, because who knows when it's actually going to break out above this trend line and maybe have your shares called away once it does rally. So I think of the 4 tickers I've looked at so far, Kroger, Chewy, Peloton, and Work, my kind of order list, if I were to play any of these tickers, and again, I'm not saying I am, this is just my trade idea for the week, I would probably take a look at Chewy first. You know, if my portfolio couldn't support the $60 share price, I'd probably look at Kroger as a close second. And then Peloton, I'd probably look at third, but that's a distant third. And then Work would be, again, another distant fourth. I mean, Work I would just eliminate, to be honest with you, from my trade idea list. And I'm actually just going to delete it from my watch list right now because I don't even want to deal with this or look for this on earnings. But yeah, I mean, right now, if I were to play a ticker this week, I'm really looking at Kroger or Chewy. But that being said, we've had a crazy 2 days in the market this past Thursday and Friday. So I'm really curious to see what's going to happen on Tuesday. I mean, I'm hoping for a green day on Tuesday and a rally, because I'm sure a lot of you are either bag holding shares that you may have got assigned on this past Friday, or maybe you still have options open and you need a little bit of a rally so you can roll them out, or maybe not get assigned shares this coming weeks or this coming Friday or this coming next Friday. But I think everyone is hoping for a green day, because I'm sure a lot of people got hit hard by the market downturn this past Thursday and Friday. So I may just end up being Cash Gang Tuesday, and maybe even the whole week. I don't know. We'll have to see how the market opens, and if hopefully we gap up. And if we gap up, then it might be a good time to maybe sell some covered calls if you did get assigned shares this past week. So those are my ideas for this coming trading week. Let me know if you know any tickers that are on your mind that you've been keeping an eye on this long weekend. If you have any questions or comments, make sure you hop in the Discord server. We're adding new members every single day, so it's filling up quickly. We have a limited number of initial slots at a low price, so if you're not in there already, you're definitely missing out. If you can't get in there, then leave a question or a comment in the YouTube section below. And as always, happy trading.